Good morning and welcome back to the Corner Barn here for another weekly deal analysis. I am Chris Thompson, that bearded guy, the creative guy. Each and every week, I jump on here, find a random house on the internet, analyze it for a cash deal and a creative deal. Let's get into it. Today, we are diving into 3401 Old Buncombe Road in Greenville, South Carolina, 2917. Excuse me, 29617. And yes, I said Greenville. You got to just kind of mush it together and act like you're from the South if you're not. Otherwise, you stick out like a sore thumb. So, spelling wise, it's Greenville. But if you've ever been there, it's Greenville. I've been there. So we are jumping in to check out this property. It is a 3 bedroom, 2 bath, just shy of 1,500 square foot. They are currently asking $350,000. This thing looks really pretty. Built in 2020, so we really shouldn't have any repairs. And if it was new construction, which clearly it was, it still has a 10-year builder warranty on all those structure. So just an added bonus. Anything exciting in here? Nothing that we can't see from the pictures. Been on the market for 50 days. A lot of people looking at it, only a couple saving it. Let's see what else we can find in here. Through the specs. All right, so this is all electric, so there's only one utility. Public water and sewer. Yes, it is in an HOA, so we would need to check those regulations to see what our rental potential is. Does it have to be a long-term rental? Do we have to own it for a certain aspect? How creative do we have to get to work around the HOA regulations? So they bought this thing originally in 2020 for $230,000. Just call it 231. Wow, that is a 51.7% increase. Well, no wonder this thing's not selling. Like the market's gotten a little better since early 2020, which is when they closed on this. So they wrote the contract in 19. So yeah, the market's a lot better, but a 52% increase, I'm not seeing. But let's see what else we can find. Taxes are pretty reasonable. The averages in the area, 327 to 362. Clearly 350 just hasn't been the number yet on something like this. All right, so Zillow's saying the rent could be 2155. I'm gonna make note of that. Schools aren't that great, at least on their ratings. Well, this thing looks pretty, so let's look at the pictures. I forgot to do that earlier. Fancy, fancy artwork here. A big open space downtown. Nice little corner lot. Not so nice. Oh, you can't see it, but all of that industrial area, which is why I'm sure they put all of these trees in. This industrial area over here, not the greatest thing to look at. So that could be part of the issue. This one looks pretty narrow compared to what else we can see just even right next door. Good lot. They were able to run the fence all around the front, good back. I like it. I'm not sure what's anything behind there, but I'm sure they're still building in the area. Dog door, big dog door. Clean kitchen, table space, barn door on the bathroom, laundry area. I like the coloring in this. What about you? Subways. Nice little setting. Not the greatest of views. Front door. Yeah, because your parking's back here. I don't know. All right, so it's pretty. All right, what else can we find here? So we know their number is not 350. According to Zillow, our range was 227 to like, or excuse me, 327 to 360, 370. I still don't see that. So we're gonna go with, let's go with 325. It's gonna be our ARV. So all in 325 ARV. ARV 325. Don't mind me, I'm just taking notes. All right, so I think we found all we can find on Zillow. So now we're going to jump over where? To the Invest Nest. I got it pulled up here. If you've never tried the Invest Nest, give it a try. It's a week free. You don't even have to put a credit card in. If you do like it, use my code Chris Thompson Real Estate at checkout, and you get like 50% off the first month. Try it, use it, love it, or not, but give it a try. It is free. One of the things I really like about this is you can skip trace inside here and they don't charge extra for it. So it's more of a one by one versus dumping a whole list into like a prop stream or privy to skip trace everything. Well, you pull in your list off of that, whatever. You know what I mean. Overview, building 20, currently on the market. No basement, which we already knew. Finance details. So I do like this because anybody who's paying attention to the real estate market in 2020, you know that they probably have a fire, I mean, fire interest rate, probably around like 2 or 3%. And one of the creative ways that we use, obviously, is subject to, just like I've learned from my man Pace over here. Subject to is the greatest thing since sliced bread. Doesn't work for everybody, but when it does work, beautiful. So their original mortgage was at 223, 224, and they're 5 years into it. So if you know anything about mortgages, they're basically obviously a 30-year term. So your first 10 years, you're mostly paying all that interest to the bank. That's why the banks want you to refinance, because as soon as you refinance, those numbers start over again. Banks makes all their money up front, you get to wait on the back end. Middle 10, you're about 50-50 on building equity and paying interest. Those last 10 years is when you really just drive down the principal balance on that thing. So I think this one would be phenomenal for a subject to deal. We're not going to analyze that one today. We're just going to treat it like a seller finance. But if you want me to go through and analyze a full subject to on this property, drop me a comment below. If I get, I'm still kind of a new page. So if I get 5 comments to run this as a sub two and analyze everything and break it all down, I will do a video on that. So it's on you. Sales and mortgage, and we already knew that. Location, Greenville County. So estimated rents um, per the Invest Nest are saying 1344, estimated mortgage payment of 1342. Those numbers don't really work, but our number from Zillow, what they were saying was 2155. So where is our third place to check those numbers? You guessed it, HUD. The link will be in the video for this down in the comments to, well, the links for everything will be down below. but I'll have the link for this. But I always like to check in here to see what HUD's going to pay. HUD, Section 8, multiple different names. Federal program run by the counties. So they're saying 1,600. So those numbers got better, but we have three drastic numbers across the board. So we've got 1,600, which ultimately they'll probably pay closer to 14. The Nest is saying pretty close to 14, but Zillow is saying 21. So we got to do some more research. So before we can go in and analyze this thing, I want to go back to Zillow and see what the just the market rents are in that area. I'm going to jump back over here. Out of that, I'm going to look for rent. And we're going to look in, we're already over Greenville. So just skim through and see what we can find. So we got 1550. Change this up. We're going to go 3 bedrooms, 2 baths. It should get rid of all the apartments. 2,200 for a townhouse. This is basically a townhouse as well, 2,000. 2,250 for a nice big single family, older. The best way to check is to find somebody local. Find a local realtor, find a local property manager. Because if you're going to be a landlord remotely, you're going to need a property manager anyways. They are worth their weight in gold. The good ones are. There's plenty of bad ones out there, so make sure you do your due diligence. All right. I think Zillow is probably pretty close on what their rental numbers are. We got a newer house. I don't know that 21, 22 is really tangible, but let's shoot the middle here. So if we're getting 16 and 21, what's the difference on that? 1850? We're going to use 1850 for our rent price. And again, check your numbers. So we're going to say our rent is going to be 1850. All right. Now we come back over to the Nest and we are going to calculate our returns. 3401. What we're going to title this thing. Purchase price. All right, so we said our ARV we think is 325. So on a cash price, break out my trusty calculator because I went to public school and I cannot do math in my head. Times 70%. 70% of what it's worth is what it's worth to us. 227.5. 227,500. So that's going to be our cash offer. 227,500. 227,500. Closing costs are going to be about 2 points. Our hard money costs or DSCR lender is going to be about 2 points. This thing's new, so we're not putting anything in for renovations. We only want to put 20% down, which is still a big chunk of change, about almost 50,000. Our interest rates, they're bouncing all over the place lately. We'll play it safe at 7.25. That was what I was quoted like a week ago on a 30-year term. Mine was also on a refinance, not a purchase. So take that, take that for what it's worth. All right, our rent price, we said we're going to go with 1850. Property taxes already built in. I think we're going with 1,500, which is what, 125 a month. Management, 10%, 185. All our utilities are going to be paid for by the tenant. I couldn't find on Zillow what the HOA fee is, but I would say average in a small community like that doesn't really have much. and it's in the south, I'm going to say that HOA fee is $75 a month. All right, our war chest is going to be that 15%, repairs and maintenance, CapEx, and vacancies. So we're basically planning for the future. If we can get a 2% appreciation, 2% rent increase, and of course our expenses are probably going to go up that much as well. We are real estate investors. We don't pay full commissions, but we do pay closing costs. That's a horrible offer. So even going all the way back to double back here, not making this too complex. All right, so they bought this for 230. So we offered them less than, where's it? We offered them less than what they paid for it, and it's still a negative cash flow. Why is that? The interest rate. Math just doesn't math on this one. So let's see if we can scale this down to see what number would. All right, our break even number, how about that? 25 cents, that's close enough. So we would have to offer $184,500 with a 7.25 rate with 20% down, and it would still break even. So clearly not a good cash deal. And ultimately, well, we already knew that because rates today are certainly not what they were in 2020. So we could probably give them their asking price, going back to the sub two analysis. We could probably give them their asking price. They would just have to take their payments over terms. So we would take over their existing mortgage, probably at their 2 or 3% rate. And then if we can rent it for that 18, we're making a decent chunk of change. So and that's if we buy it all the way down here. But ultimately, for about $44,000, you could lose a couple $100 a month. So not a good scenario on this one. And we burn all of this one on it. LTD. And let's go back to see where we would potentially have to get that interest rate at. Well, let's see what their rough payment was. Another thing I love about this software is you can just plug and play and figure it out as you go. So if we drop this interest rate down, even to 3.5%, paying what they paid for it, their monthly mortgage payment is under $1,000. Now that would be a great deal. So they could potentially rent this thing. They probably don't want to because, well, most people don't want to be landlords because it is a pain in the neck. So that's pretty cool there. All right, so let's go back. And we're going to analyze just our straight seller finance deal. We'll come over here. So we said our ARV we think is going to be, oh, sorry. This is my calculator that I created. Go to my website, christhompsonteam.com. You can download my calculator, my creative finance checklist, and also my contract. They're free. Download them, use them, enjoy. So our ARV is going to be there. Based off of playing around with the invest nest, we know roughly where we need to be on those numbers. So let's just do it at 300 because I don't think anything higher than that's going to work. And we're going to offer them a 2% interest rate. So now we're going to head over to the invest nest, excuse me, to Bankrate, not the invest nest. So I want to use the mortgage calculator. I love this site. It's simple, it's easy, and doesn't cost you anything. I'm sure there's got features and everything that will upgrade. So our home price, we said we were going to offer what, 300? Yeah. All right, so 300,000, and we are only offering them 5% down on a 30-year term at 2%. Our zip code, I wrote that down, is 29617. Our homeowners, we said, was 125 a month. Property taxes, let's confirm that back here. Monthly property taxes, 180. They got almost 200. We'll leave it at the 198 because more than likely they're going to go up. And let's calculate this thing. All right, so our all-in PITI, or principal, interest, taxes, and insurance, is 1376. Back over here, put this in 1376. We said our projected rents are 1850. So our gross cash flow 474. Make sure I still got these. Oh, that's at 10%. Back up to 15%. So our war chest we have at 15%. So that's going to be our repairs and maintenance, vacancy, and capital expenditures. Management fee, 180 bucks. Not a good cash flow deal. But let's keep going and see kind of where the numbers lay. And basically, when I analyze something, I put it in for what I think, and then I start backtracking. So if this number doesn't work, what number does work? If I put a little more down, or ultimately probably just a lower price. But all in, a gross cash flow of almost $500 is pretty good. And this war chest number, because this is so new, you could probably scale those numbers down, but I like to be consistent on my podcast, so I'm keeping it at 15%. Cash to the seller, we said was going to be that 5% down, which is 15,000. Agent commission, they're clearly not getting it done. We'll offer them $1,000. Assignment fee, there is no wholesaler involved, so we're not soaking that up. Closing costs, I average about 3.6% covering both sides. Cost of renos, we got nothing because it is already rolled in there. And our 2 months of holding costs, PITI, arrears, there aren't any. TC cost you about $1,000. So for $30,000, $31,000, you can basically net $11.50 a month. But there's one thing we forgot to add in here, the HOA fee. So once you add that HOA fee in, and we guessed it at $75, you're now at a negative cash flow deal. So these numbers clearly are not going to work. So if we want to, let's try to make it work. Let's go back up here, and we're going to say we're going to offer 275. And 5% down. Leave everything else the same. So that brings it down to 1222. If our PITI drops to 1222, all right, not a great return, but still a whole heck of a lot better. Oh, and then our cash out of pocket goes down 13,750. 13,750. That brings it down about $2,000. So now we got to subtract that out. So equals net cash flow minus 75. So you can throw that HOA fee in there, and it's like 90 bucks a month. So for 30 grand, it'll take you just shy of 15 years to recoup your investment. And that's if you don't change the rent price. If it goes down, clearly that's going to take longer. But generally, if you can increase that rent price, I typically do between 2 to 3%. Obviously, that average would be 2.5%. If you have a good long-term tenant, Don't jack the rent on up. Do not jack the rent up on them. It's it's not a good idea in my experience. At least it hasn't been for me. What about you? If you jack the rent up, does your tenant typically move out? Now, sometimes as a landlord, that can be a good strategy to get a tenant out that you don't want. But ultimately, if you got a good long-term tenant and you plan on holding that property for quite a long time, do small gradual increases. Property taxes are going up, cost of insurance is going up. So just have that conversation with your seller with your tenant. Hey, my costs are going up. I don't want to raise your rent because you're a great tenant and you take really good care of the house. So instead of raising your rent up to whatever else I feel like I could, unless there's a market cap, then just say, hey, my costs have gone up. I have to pass those on to you. Otherwise, I'm going to have to move you out and sell the place because it's not a good asset for me anymore. But just have that open line of communication with your tenants or via through your property managers. Your property managers should be having those same conversations with the tenant and you. So that wraps up another weekly deal analysis here in the Corner Barn. We found out that 3401 Old Buncombe Road in Greenville, South Carolina, not a great cash deal, even at even less than what they paid for it with today's rates. We broke down and analyzed and had to play around with the numbers a little bit to try to make a cash or a creative deal work with the seller finance. I think this one would be a perfect subject to offer because again, they bought it in 2020, they contracted it in 19, so they probably have somewhere between that 2 to 3% interest rate. If you want me to go through and do a full subject to analysis on this, I'm happy to do so. Drop me some comments below. If we get 5 people to comment, I will do that analysis. Thanks for tuning in. I am Chris Thompson, that bearded guy, creative guy, and we're in the Corner Barn. We'll see you next week.